I think that gold is going to outpace the cost of mining it, especially now, like I said, oil has never been this cheap priced in gold. That's great for the gold mining companies because that's a major input. But, the fact that we've had so little investment over the years in exploration and development means that when the gold price is 3,000, 4,000, 5,000 higher, you're not going to see a lot of new gold coming to the market to take advantage of those higher prices because the industry just doesn't have the ability to produce it. It's going to take time to bring a lot of these mothballed mines back into production, and it's going to take even longer to find more gold.
In today's news recap, silver is in a hidden global bull market. Silver has been lagging behind gold significantly, creating uncertainty for investors looking for opportunities in precious metals. Interestingly, silver has been setting new all-time highs in several global currencies, highlighting investor interest around the globe. Whether this is related to the alleged silver suppression, currency divergences, or anything else is completely out of scope of our work. It may even be completely irrelevant to investors. What truly matters is that silver has printing a series of fresh all-time highs in currencies like the Indian Rupee, Australian dollar. Moreover, in other global currencies like the Canadian dollar and euro, silver is inches away from hitting new ATH. It becomes clear that the global investor interest in silver is very strong, much stronger than the silver in USD story makes us believe. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Well, certainly the BRIC nations are, basically building a new monetary system, brick by brick, but it's going to happen. They're going to supplant the dollar. It's only a question of when, not a question of if. The timetable, I think, was accelerated by the Biden administration's sanctions against Russia, which really was a wake-up call to the world that you need to get out of the dollar, that you're too vulnerable. You're basically beholden to the whim of the United States to impose sanctions on you if they don't like something that you've done. That should be particularly problematic for the Chinese, because we're constantly criticizing the Chinese. It doesn't make sense for them to put themselves in this position. So obviously, they're going to be moving away from the dollar. That's why the price of gold keeps hitting new record highs, even though American citizens have been selling their gold all year. So have a lot of other Europeans. It's foreign central banks and people in the BRIC countries that have been buying the gold that Americans have been selling. And they're doing it for a reason. They're going to keep on buying it. The price is going to keep rising. Eventually, the American investors who sold their gold are going to try to buy it back. Of course, it's going to cost a lot more money. And people who never bought any gold are going to start buying gold. And so then, the prices are going to start to move up much faster. So far, it's been a very slow, orderly ascent. There's been a lot of doubters, a lot of naysayers. The gold stocks, the silver stocks, are dragged behind very reluctantly. Every once in a while, they make new highs, but then they get clobbered the minute gold goes down $50. It's like, oh my God, this is it. It's going to crash. But once we really get, north of 3,000, 4,000, who knows, you're not going to have all that negativity surrounding the gold bull market. People are going to accept that gold prices are going up. And it's really not gold prices going up. It's the value of the dollar and other fiat currencies going down. When our republic was formed in 1789, you only needed $20 to buy an ounce of gold. When we formed the Federal Reserve, well over 100 years later, in 1913, you only needed $20 to buy an ounce of gold. And even as late as 1970, you only needed $35 to buy an ounce of gold. Now you need $2,600. Now, it's not because gold has changed. It's exactly the same. It's the dollar that's changed. It's worth a lot less because we have so many more of them in circulation relative to how much gold we have. And the rate at which dollars are created is going to increase exponentially in the years ahead. And so I've thought that for a long time, and it's been cheap for a long time. If you look at the gold-silver ratio, silver is cheap relative to gold. And so the price of silver has got to go up. I mean, there's nothing guaranteed in life, but to me, this is about as close as you're going to get. Silver prices are going to go up, right? I mean, silver was $50 in 1980. I mean, how many things could you buy today for less than they cost in 1980? I mean, other than electronics, right? Like a television or something. But a commodity? I mean, silver is a bargain. And, you got to buy it. I mean, I've been talking about it for years. And, I remember when silver was under $5, under $4, when the century started. So it's been going up, but it was so cheap, in 2000, 2001, with $4 or $5. Gold was under $300 an ounce. Gold has gone up more than 10x so far this century. It's almost not quite 10, but nine times. The Dow is only up a little over 4 times. The Dow was about 10,000. Now it's a little over 40,000. So in terms of gold, the Dow has actually gone down. But it's still, I think, expensive relative to gold if you take a broader historic look at it. So the stock market is expensive. What's also cheap is oil. Oil prices are very cheap. You can get almost 40 barrels of oil for an ounce of gold. That is historically cheap. That means that oil prices are not going to stay at this level. They are going up. And that is bad news for the CPI because it's going to weigh heavily into headline CPI. But all this, I think, is going to occur against the backdrop of a U.S. recession, which means real interest rates plunge even more than nominal rates. We go back to quantitative easing. And that's going to send, gold and silver to new highs. It's says that for silver to hit new highs, it's a much bigger move. That's why, people should be buying it.
In today's news recap, silver price struggles below 32 pivot. Will bulls push higher? Silver prices hovered at $31.85 on Monday, despite a strong surge in demand, particularly from the solar energy sector. The recent decline can be attributed to improved market sentiment. Investors are shifting focus away from safe haven assets due to easing concerns over a U.S. economic slowdown and optimism around China's stimulus efforts. Ongoing supply shortages are set to play a critical role in determining silver's future trajectory. According to the Silver Institute, global silver demand has outpaced supply for 3 consecutive years, with a projected deficit of 215 million ounces for 2024. This imbalance is driven by increasing industrial consumption and limited new mine production. Despite the rise in prices, production remains 62.8 million ounces below its peak in 2016. Additionally, the Bloomberg NEF report highlights that a broader shortage in key transition metals could further elevate silver prices. The report estimates a $2.1 trillion investment is required by 2050 to secure a stable supply of raw materials necessary for clean energy technologies. Without this investment, the costs of essential metals like aluminum, copper, and lithium could rise sharply by 2030. For now, the combination of rising demand and limited supply points to higher silver prices in the near future. As shortages deepen, competition for these limited resources may increase prices, especially if supply disruptions persist. Staying attuned to these market developments will be crucial for investors and industries relying on silver. This will help them navigate potential price volatility and secure long-term supply stability. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily recaps.
I own a lot of gold mining stocks myself. It's by far my biggest sector that I have in my personal portfolio. And I added, considerably to that position earlier this year, back in February, March, when gold was still close to 2,000 but above. and Barrick and Newmont were hitting multi-year lows based on downgrades by Wall Street. I hadn't anticipated buying more, but I don't look a gift horse in the mouth. And so I took what the market was giving me. But, I think that these stocks are historically cheap. The sentiment is historically negative. I love being a contrarian. Normally, how do you buy gold stocks when gold's at an all-time high and be a contrarian? Well, you can, because nobody expects gold to stay at an all-time high. People expect it to go down. And, for many, many years, the gold mining stocks were the ironic victims of inflation. And people just assume that that's the new normal. And why they were victims of inflation is inflation drove up the cost of mining. But the price of gold didn't go up as much as the cost of mining it. And that was because people didn't realize that inflation was actually as bad as it was. And so that hurt gold mining profits. Even though, yes, we can sell our gold for more money, it's costing us even more to get it out of the ground. Well, I think now that gold has finally broken out of this consolidation that it's been in since 2011, I think that gold is going to outpace the cost of mining it, especially now, like I said, oil has never been this cheap priced in gold. That's great for the gold mining companies because that's a major input. Also, their wages, the dollar has been relatively firm, and so the wages are low compared to where they would normally be with a big gold rise. Normally, the dollar is falling against a lot of these currencies where the wages are denominated, but that hasn't happened. So I think these companies are in great position. They've also cleaned up their balance sheets over the years, paid off debt. They're generating tons of cash right now, the big companies, trading at ridiculous valuations relative to what's historically been the case. I think there's going to be a major consolidation in the industry. I think a lot of the smaller companies are going to end up getting bought up by the bigger companies because they're not going to have much to do with all the cash. It's going to be a lot cheaper than, funding exploration projects. Just buy up some of these super cheap companies, and get a sure thing instead of gamble. But, the fact that we've had so little investment over the years in exploration and development means that when the gold price is 3,000, 4,000, 5,000 higher, you're not going to see a lot of new gold coming to the market to take advantage of those higher prices because the industry just doesn't have the ability to produce it. It's going to take time to bring a lot of these mothballed mines back into production, and it's going to take even longer to find more gold. So we're not going to see a complete separation of money and state. I'd like to have the free market determine what money is and let the government collect taxes in whatever the people are transacting in. I don't like the government to just be able to conjure money into existence out of thin air that has no fundamental value to it. So that's the inherent problem in our current monetary system, the fact that we don't even have any money. It's just all based on fiat. But I think a central bank digital currency would be just even worse than what we got now, because I think the government would have even more control over the money if it were digital, because at least when it's physical in paper, yes, if you transact through the banking system, through your credit cards, debit cards, PayPal, things like that, yes, the government can figure out what you're doing, but you still have a way to be private, and you can use cash. And I'm not talking about, I'm advocating for criminals to be private. I'm just willing to tolerate that so that honest people can have privacy. And that's what keeps the government honest, because if they know that people have no privacy, they're more likely to oppress them, because they know that organizing any kind of resistance is more difficult. So we have to preserve some individual liberty and a right to privacy and the ability to transact, not because I want to do something illegal, but because I don't want the government knowing every legal thing that I do. And of course, they may criminalize a lot of conduct that is perfectly legal today. And what the government does would be illegal. The government would be unconstitutionally outlawing what should be lawful. And in that case, it's the government that's the lawbreaker. But the government, if they take away our cash, then they make it more difficult for us to get around their unconstitutional laws. But that is where they're going, And of course, it'll be even easier to, manipulate the economy, because if they could just load up our digital wallets with cash that has an expiration date, they could really say, okay, everybody go out and spend right now. And if you don't spend your money, it's gone, and really try to, micromanage, consumption spending, because they always try to stimulate the economy. But of course, the stimulus doesn't work, but they do it anyway.
So as a part of this ongoing war,
what do you think of Peter's interview? Do you agree with him? Are miners really undervalued? Post in the comments section your honest opinion and share with the stackers if you also hold miners in your portfolio, or if, on the contrary, you stick with the metals themselves. Thanks for watching. Now, check this video right here because you'll like it. I'll see you on the other side.